All right, everybody, welcome back in to Mining Stock Daily. We're going to get some general market commentary on today's tape. It's a pleasure, always a pleasure to speak with Sir J.J. Johnston. J.J., it's good to see you. Last time you and I spoke was back in Nashville. It's good to spend some time with you.
Yes, sir. Yes, sir. Good to see you, Trevor.
Yeah. Listen, we had Tony Greer on earlier in the week. Both of us kind of name dropped you and what you've been writing about here the last couple of weeks on the back of escalations in the Strait of Hormuz. President Trump came out last night, prime time, and basically reiterated everything he had been stating on Truth Social. No changes there, really. Oil went up to Brent went up to about $112 a barrel this morning. Equities opened up a 1.5% down, but have climbed up and actually were flat at a moment. And then precious metals also took a bottom and climbed up here. So there's a little bit of whipsaw in today's tape. Just kind of curious, are you at all surprised in the opening, equities down, oil up, and then kind of finding flat today?
No, I'm not. So let's start with oil. So first, you have to understand that WTI is a storage market. Brent's a cargo market, right? So the difference is Brent it's loaded on ships, and it reflects data deals within 10 to 30 days, and so Brent can go anywhere, but because the source of Brent is it's an anachronism, really. It's the old 40s North Sea, but it really represents Middle East oil now. So all that oil goes east, right? So yesterday, actually, it was interesting. That was the first day that seaborne oil at the beginning of the war, the last tanker made port in Asia. So there's zero oil from the Middle East going to Asia now. And prior to the war, all of the Middle East, or almost all, went to Asia. So, they are not getting the majority of the oil they had been getting, and so that's a big problem for them. But WTI is a storage market because it's landlocked, and all of our oil, it's just almost all of it's pumped here, right? We're the largest producer of oil in the world, so we produce 20 million petroleum fluids every day. More than that, 23 actually, and we consume around 20. So we export about 3 million a day now, and we have a market that's very sensitive to storage, to onshore storage. This is completely different markets. I mean, they are fungible to an extent. There's an arb, but it takes ships to do them. So that's why oil is kind of cheap here, and it's very high over there because they don't have any. And what Trump was trying to tell us last night is just like, look, we don't really need you. We have Canada right next to us, which is 20 API, and our tight oil is 45. So we need a little blend stock that we can import and play with and so forth like that. But we really are now totally self-sufficient in oil and an exporter. So this Hormuz thing, it's been an evolving story. The primary story is still in force. Iran's been a pain in the ass for a long time. You're poking the bear, and they finally poked the wrong bear. Trump has been spoiling for this fight since 1987. If you go back and you listen to the things he's been saying, he's been consistently saying we should just let's just get this over with. They took our people hostage. They took all our assets. They kicked the British out. And they've been pretty nasty to everybody else in their own region. So I think that's the genesis of this. You're finally sticking up to the bully, saying, okay, here we go. So that's what's happening now. And hold it. Well, I have personally, I think we're not dealing with Joe Sixpack with Trump. He's not Biden. He's not a political animal. He survived hundreds of lawsuits. He he didn't have to run in 2015, he did. There's that Jan 6 thing. They tried to kill him twice. So, having survived all that at the age of 78, sitting in the Oval Office, I think he feels kind of like he has been given, I don't know how to say it, 'cause I don't think he sees himself like, uh, in holy light,
Mhm.
but an historic mission where, he finds himself. I wrote about it last night, like Patton said, "Here I am with the right instrument, in the right place, the right time in history to, to do something I believe in." So, I think, people still don't get it when he says, I'm gonna I'm gonna finish this," and whatever that means, you know what it means. He means business, so
Yeah.
that's where I see oil.
There's certainly like he feels a little bit invincible, specifically coming off the back of the success in Venezuela and the extraction of Maduro, right? And this seems really quick, but it is going to come at a cost, JJ. And love your writing. You are a master of the tape, something I couldn't even tackle if I tried. That's why I
Okay.
love reading your stuff. But I'm thinking more foundationally and trying to think long term here. Now we have an oil curve it is in incredible backwardation. So the market's
Yeah.
somewhat pricing it. It's willing to give Trump that 2 to 3 weeks, right? That he kind of laid out last night on TV. But, we're also kind of, from what I'm telling, I put out a post on Twitter today. From what I'm reporting, the analyst coverage that I'm seeing is we're 2 weeks away from that last pre-war tanker coming to the Americas. And after that, there's nothing. Now, I know we're hanging our hat on domestic supply. Totally get that. But, it's not, I'm just kind of curious the physical shocks that if you're thinking about that timeline after that last ship arrives from pre-war Hormuz, what the effects might be not only on energy, but also on industrials, the petrochemicals, the fertilizers, all those things. And what does the next quarter two, quarter three look like in your mind?
I don't know, we're never going back. S s this is really, the edge of the world right now, so we
It's a
we
great line right there.
I can't tell you where we're going, but, I think it's pretty clear about NATO. Most Americans agree with him. We it had a purpose, in the past, and it's not working now. I don't know what happens to it now. Maybe they rethink it. Um, the politics are so temporary. Um, OPEC, I think, is effectively finished right now. They're going to look inward, not outward. They're not going to be a swing producer anymore because of the curtailments or the shut-ins and maybe some impairments of their fields from what's happened. Iran is gone. I don't know what's going to happen to it. That was 4 million a day. Um, Trump's pretty plain spoken when he said it's going to take 10 to 15 years for them to recover. So the oil is still there. That's the jump ball, and this is where the jackals come in because he's saying, I don't want this oil really. You people are the ones that use it. I'm I'm sick of fighting for it, and you're not gonna help me, so I'm probably going to, finish up with my bombing so that I'm utterly satisfied that I've completed the initial phase of my mission. I'm going to back up my allies in the GCC countries, especially Saudi Arabia, and make sure nobody hurts them. And to the extent that it's possible, without any cooperation from you, uh, the options are pretty limited for him to open the strait. And you know what they are, right? I mean, they're not pretty.
No.
They're actually very dark, very dire. But the strait has to open. It's you cannot shut in a quarter or even more of the world's oil long term, as you're saying. That oil's got to come out. Period. That's it. And whatever it takes, I have a feeling Trump knows what it takes, and he's loaded up over there. He's got at least 2 active aircraft carriers. I don't know if the Ford is still is still in service. He's got 50,000 men. He's got the United States Treasury. I mean, it's formidable force. A lot of people think that, he can't do it. I don't know. I don't know enough to say that, but I think that we're going to find out one way or the other. So either Europe, does nothing, and if they do nothing, then Trump will do it his way. If they come
Mm.
in their way, send some ships in, try to figure this thing out. The only thing that can't this is what can't happen. Iran cannot turn the Strait of Hormuz into their private toll booth and charge $2 million a day for every ship going through. That just won't stand. I don't see that happening. And the other thing is, so let's talk about oil, and then I'll move to gold or something for you.
Yeah.
We're going to have 2 markets. The United States is self-sufficient, and Venezuela is rising. They exported 1 million a day last month. And we have some pretty big animals down there with a lot of money and a lot of know-how and understanding of Venezuela that are going to redevelop those wells. So they have 300 billion barrels. I think Canada has 250 billion barrels proven reserves. They're selling leases on the North Slope again in Alaska. So that's going to take care of California. It'll take a little while, but things move pretty fast in oil now compared to the old days. It's
Yeah.
it's what it is. We don't need them. We don't need them.
Mm.
China can have them. Period.
Let's move on to the metals side of the commodity sector, JJ. It's interesting. The negative correlation between gold and the dollar reversed. When was it? Last week. And gold finally found a little bit of a bottom, a trading bottom, started moving higher with the dollar, which was nice to see. TG, our buddy Tony Greer, thinks that little dip on its 200-day moving average might have been the low that we'll see in this move. Curious what you're seeing in precious metals, and kind of what kind of factor gold's going to play, and however this market kind of sorts itself out through the rest of the quarter.
So central banks have made it absolutely clear that they are moving towards gold, particularly those that are oil sensitive in the consumer countries like China. So I don't see gold going down. All right, it could wander. Uh, Gold is not a safe haven asset in this market right now. It's negatively correlated. So when it looked like peace, gold went up yesterday. And when it looked like war or more trouble in the Middle East, gold went down today. So that means that the the spec community in gold right now doesn't have great location. The anchor length in gold, particularly CBs and long-term specs and passive holders and things like that, they're not going to be bothered. They're not going to move. And that's the meat in the sandwich. But the other side of gold, the hot money that moves into ETFs in and out, so forth, that's very unstable right now. And it's responding to the wrong things. Oil is inflation. Oil is not good for the dollar. And gold should be going up on that, but it's gone up so much. I think it's borrowed a lot of its mojo last year in going up to 5,000. So it's already pre-discounted all the stuff we're seeing now, and it doesn't need details like that. It is what it is. Same kind of thing for silver. Right now, the dollar is the safe haven asset. yesterday, when it looked like peace, the dollar went down and bonds went down. But today, when it looks like trouble, the dollar went up and bonds had a snapback recovery. So I think gold stays here. Maybe it goes down to 4,000, maybe
Mhm.
something really crappy happens in oil. It goes back to 5,500, might make a new high, but I don't think this is in a position to make another major leg up. It needs to figure itself out here. It's only been a
Yeah.
$5,000 commodity for a few weeks. So let's see what happens.
It seems so long ago, actually. This is, I
Yeah.
mean, last 3 weeks have been the longest year ever, right? It's just been something.
Yeah.
Every day
Yeah.
something new. One last thought, JJ, and I'm wearing my Nesvik Trading Group hat, so shout out to the crew in Tennessee. Nesvik, I mean, they're just top-notch ag traders. Love to get to know them the last couple years, but I've been thinking a lot about agriculture. Just kind of curious. We've seen the ags really move up and finally getting a bid here. Is this more speculation, or is it more seasonal? I'm just kind of curious if you've given any sort of thought on agriculture commodities. And this is a little bit of a curveball for the mining guys, but I think it's worth asking you about.
Well, first of all, biofuels are pretty big now. So that's a marginal uh, connection. I don't know how much it is because I haven't traded grains in a couple of years. But I did say early on when we got started in this thing that corn would probably catch a bid because of, ethanol. And it's, I know from working on grain desks back in the GFC days that I think 4 billion of the 15 billion crop in corn goes to biofuel, right? And goes to ethanol. So that's a pretty hefty number. Uh, if And I'm not sure, a friend of mine works at uh, PBF, I think, in Whippany. It's just up the street here from me. And he handles the renewables uh,
Mm.
book. Bean oil is also a pretty big part of the ag picture now. So those two things are meaningful. And if oil, cuts loose and goes up, a lot, and it's not really very high right now. I wrote this morning. And last night, I published a piece called The Evening Wrap, and I I show the charts and data that oil is effectively about 40% cheaper than it was in 2008. For instance, the high in RBOB in 2008 was $3.60. Settlement last night in RBOB is $3.07. So just nominally, those two prices, gasoline on the board today is I don't know, maybe 15% cheaper than it was in 2008. But in terms of Bitcoin and gold, gasoline, if you were to just do a relative value, dividing the two, one by the other, gasoline is 90% cheaper today than it was in ounces of gold in 2008. And it is 90% cheaper than it was in 2008 today. In Bitcoin,
Mm.
it's about 60% cheaper in terms of units of equity indexes. So just those three investment products, gasoline is actually on its lows, at its highs now nominally, based on the last real spike high we had in crude oil, which was in July of 2008. So I put a note up and I said I enhanced that study this morning. I did this on Substack. I enhanced that study this morning to calculate how long it would take the average worker to earn a gallon of gasoline in 2008 versus 2026 based on NYMEX spot RBOB futures. In 2008, roughly 12 minutes of work bought 1 gallon of gasoline at the $3.60 level, which was the 2008 high. And yesterday, in 2026. During the Iran oil crisis, it took only about 5 minutes of work, or 59% fewer minutes of work to earn the same gallon of gasoline. And my sources on this were the Bureau of Labor Statistics and Standard Source Metrics. So gasoline is not expensive. It's, we're we're being gaslit by everyone saying, "Oh, gasoline is going up." I remember I stopped buying Suburbans in 2000. I had a Suburban for a long time, but I stopped buying them when it was $100 to fill the tank, right? And that was from 2010 to 2014. So I kept my Suburban until it had like 300,000 miles on it, but I refused to buy another one because, in those days, gasoline was $100 a barrel for 4 years. But, our memories are just so short. And we don't think, or let me just say this. Excuse me. We're not curious anymore because we have phones and we go on X and we allow people to tell us stuff, and we just listen to all the different voices and we pick the one we want and we say, well, that's my form of truth. But no one does arithmetic anymore. As a matter of fact, they don't even know how to do arithmetic. And I'm old, so I when I was a boy, I had to walk barefoot to school backwards uphill in the snow.
Uphill both ways.
Good old days. But there's a thought for you and your listeners to step back, look at the recent history, sit down with a calculator, and just figure out for yourself what this stuff is really worth.
Yeah. All right, JJ, one of the many reasons why we try to touch base with you a few times a year. Thanks so much for your time and your insight and your writing. If anybody's interested in JJ's Substack, Alyosha, go find it on the Substack, The Vibe. It's a great read. JJ, thanks so much. Happy Easter to you and the family. We'll talk to you again next few weeks.
Thank you. I kind of lost you there, but just in case anybody wanted to find me, you can find me at jj745@substack.com. And my handle is Alyosha. So Thank you, Trevor. It's always a pleasure.
Thanks, JJ. Cheers, man.
Bye.
The information presented should not be considered investment advice. Mining Stock Daily and its affiliates are not responsible for any loss arising from any investment decision in connection with the material presented herein. Please do your own research or speak with a licensed financial representative before making any investment decisions.